is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Ron Ondechek Jr., who is a seasoned investment executive and the founding and managing director of South Highland Ventures, a full-service private equity firm with over 15 years of experience across venture capital, private equity, investment banking, and corporate operations. Ron has led and supported more than 100 transactions totaling over $1 billion in value. Ron, thank you for joining us.
Oh, no problem, Hall. Always great to be here with you.
Great. And so where are you calling from today?
San Antonio.
Great. And so, your mandate at South Highland Ventures as the managing director for family offices and advising growth companies, how is that shaping your sourcing and diligence for the deals that you do?
We're very fortunate and blessed to be surrounded by a lot of very sophisticated and active people. And so over the years, we've been able to develop some proprietary deal flow streams, mostly coming from individuals and family offices and just from the networks that we've worked within. Now, when it comes to our low mid-market acquisition fund, like working with search fund acquisitions, we've partnered with a family office in Europe called Novastone Capital Advisors, where they are helping with that deal flow. So those are some of the key things that we like to corner and work with folks that have the same mindset as we do, so that we can find top quality deal flow that have been looked at by others, but haven't been blown out to everybody else.
Cool. Well, you've seen over 150 transactions at over $1.3 billion in total enterprise value. You certainly must have some pattern matching that's going well there. What do you see that consistently creates value, and what do you see that consistently destroys value in this space?
Well, yeah, I definitely have seen the same movie many times with different characters playing the leads, right? But hey, it's, the things that we really look for are three main things. One, can the entrepreneur navigate the market? Is there a market? And then looking at, like, if it's more on the venture side, obviously you have a technology risk that you need to account for. But if it's more on the private equity side, it's looking at the exitability of the company, right? Is there a pre-existing pathway for a company to get to a liquidity event? And so we try to find people that like on the entrepreneur side, entrepreneurs that understand the investor's perspective, which is really important, and entrepreneurs that can work with a team. Entrepreneurs are very diverse and have different styles and can be very successful. With us and with our program, we find that the most successful ones are those that work best with others and that can delegate, so they don't get spread too thin and they're not caught, having to run everything on their own. So those are some of the key things. Now, when you get to like some of the pitfalls, right? Communication is always key. So whenever you find that you have a rhythm, a pattern of communication, right? Where you have those weekly calls, or you have direct lines of communication, and then all of a sudden things go quiet, right? It takes longer for people to respond, or maybe like a style of communication has changed. Those are usually things that you need to look out for. And, it's always that second board meeting where you really know. The first board meeting is the honeymoon after the investment. But then that second board meeting is really where you find out if things are going to work out or not. But those are some of the things that you kind of look out for. But it's just looking at patterns and looking at changes and making sure that people's motivations are properly aligned. And you have to get that right out of the gate, because then they're going to start to diverge. And over time, it's going to become more and more apart from each other. And you need to keep those things aligned as closely as possible.
So it seems like in the underdeserved markets and the micro to lower middle market, there's an attractive space there now where they maybe mispricing risk. What are you seeing out there as a sweet spot for this?
Our sweet spot is really in the 2 to 10 million EBITDA range, where we're finding companies that, they have the longevity. They've been around for a couple of decades. They have, 50 to a couple of hundred employees, but they're not over the hump, right? So they don't have the level, they don't have the CFOs in place. They don't have the lieutenants, the VPs, some redundancies in place. And so that's an advantage for us, where we can come into these companies and provide those missing key ingredients in order to get them over that hump, so that they can get to a level where they could be more sustainable and also get to a point where you can get a multiple uplift. So you can prepare these companies to have the current best practices and systems in place, and they're more in line with their peers. I mean, that's one of the reasons why these companies are undervalued, because they don't have those things. They don't have the audited financial statements. They don't have the governance that other companies do at their scale and stage. And so we provide those things through, through us being investors and being active and prudent board members, but also with the entrepreneurs that we bring in that already have that experience. This isn't their first rodeo. And so they're able to, like, they've grown and in many cases sold companies before. So they're able to take those things that they've learned and apply them to the companies and work with us and the sellers as we grow the company.
Great. So how do you find deal flow in this space? What kind of channels are you setting up with founders, bankers, and operators? Is any of it exclusive, for example?
Yes. I mean, most of the deals that we do are exclusive, and those are coming from our network. And we're blessed to have worked with some fantastic, bright people over the years, and they know what we're looking for, and they think of us first, right? And we're very honored for those kinds of referrals. But also our entrepreneurs that are in our search fund program, they're coming from the industry themselves, and they're coming with companies in these industries that they're already known, right? And so that really helps us to bring exclusive deal flow where we are the only fund that is looking at these companies to acquire them because they want to work with us specifically. And that's really a compliment to us. I mean, we also do work with brokerage houses and bankers and things of that nature. We might not be the highest bidder, but we want the seller to be able to choose and look at us and say, okay, well, who's the best partner? Who's the best partner that's going to, provide, pay a fair price, but also who's going to take care of my baby, right? Who's going to have the vision and the maturity to grow the company into the future, as opposed to maybe, grinding it into dust in a year and a half and flipping it. And so that's what helps us win deals, but also, working through the brokers, is important for us too. And if it's a good opportunity that fits, we will take a serious look at it, regardless of where it's coming from.
Well, you covered quite a range of sectors there, from industrials and business services to software and even healthcare. How do you underwrite across all those industries?
Yeah, that's that's an excellent question. It's really our process. Having a process already laid out, having base documents, having in-house resources that are available to help these entrepreneurs. That's what really is helpful. So, like, for instance, whenever we acquire a company, we already have like a template term sheet and template governance. So we have 5 board seats. That's, the CEO, my family office partner, 2 investors, and an independent, right? And we come in with a preferred position. And so we just use that template for all of the deals that we do. And so that makes it a lot easier for us to not lose our minds and remembering the different terms and structures, but also it helps us scale because we're targeting 4 to 5 companies a quarter. Now, there are some things where you have to make some modifications, right? I mean, we are buying companies in different countries. We're in the EU and Canada and the United States, with the US being the largest market. And also you have companies that have different assets, different business models, and there will be some nuance, right? Like maybe you need a blocker entity for international investors in US companies and things of that nature. But we have a team that's skilled to kind of navigate those nuances, but really having a repeatable and an efficient process, and keeping the big things as simple as possible and as similar as possible is what allows us to do the scale and to get into the different industries that we're in.
Well, you also create operational value here for these companies you work with. Do you get into turnarounds? Do you change management? What else do you guys get into?
Yeah, we're with our experience at South Highland Ventures, we've done plenty of turnarounds. We are not currently investing in turnarounds with our fund, but some of the key things that are interesting with turnarounds is that there's no time, right? I mean, you got to get right to the heart of the matter. And so it allows you to focus on the most important things immediately and to get after things quickly. And so it allows you to cut through the drama in many cases, right? Because you got to save the patient, you got to save the company. And so those are things that I enjoy. I mean, as a former engineer, I like fixing things, right? And putting things together and building value. And those are situations that we enjoy and we're good at. And understanding, working in turnarounds and working, having a background in high technology and adoption, we really see ourselves as agents of change, right? We're acquiring these companies that are struggling with succession, and we're bringing new tricks to the company and improving and modernizing the company as we come in. And so not everything is a turnaround where it's so laser focused, but in the same token, having the same kind of mindset and attitude with implementing change is a transferable skill that we have in order for us to adapt for different situations, given all the different companies that we get into from different industries and different geographies and things of that nature. Because the languages might be different, but the language of business is the same, right? You have the same ethics and concepts and that you need to implement. And so the speaking the language of business is what keeps us afloat.
Well, you've structured a lot of deals and you've put many different models into place: management buyouts, earnouts, debt consolidation, and more. What do you find works and what do you find doesn't work?
Yeah, no, I hate to do this to the hall, but it depends, right? Like
Oh, well,
the
in that
classic,
case.
that's the classic fund manager deflection. But all silliness aside, I mean, it really depends upon balance, and that's what I like about our search fund acquisition model is that we make sure that the three parties, the entrepreneur, the seller, and the investor, all of their interests are properly balanced. So, and we're not leaving anything that is confusing or has a potential for people to get greedy, right? And so, like for instance, we want to make sure that entrepreneurs get paid competitively for what they're doing, but we want them to be driving returns. So they earn a healthy carry on the companies that they acquire. And as they stay in the company and reach milestones, their carried interest vests. And they can only earn that carry whenever there is liquidity from their position. I mean, they could still be the CEO of the company after we get out. And we would actually prefer that, but they don't get paid until we get paid, right? But the entrepreneurs are earning more carried interest than we are with our fund, right? And so, and we balance with like investors, for instance, where we allow investors to invest directly into the companies with zero fees. And we give them a lot of flexibility so that they can kind of pick and choose where they want to deploy additional capital. And so those are just a couple of the examples, but really having the balance. And because we're syndicating these acquisitions, we're kind of forced to work with each other instead of just like one fund kind of forcing everything through. And so that's one of the beauties of the model, the search fund model, and one that we're sticking with as we scale our operations.
Well, that's great. Well, you also work with, boardrooms, and you've worked with different companies in trying to align management with investors. What have you found works with VC and PE-backed companies around that area?
Yeah, I mean, I think it's setting expectations
Hmm.
is really important, and expectation and boundaries, right? I think it's on the VC side, you want to have as small of a board as possible. I mean, you want to have making sure that you have, the proper thought leaders and access to markets and things of that nature, and have the right advice from people. But you get too many people when you need to be so laser focused, right, on adoption, getting your product, your go to market strategies, and things of that nature. And then in private equity, it's a little. I mean, you want to set the proper expectations and boundaries, but in private equity, it's a little bit different. Where I mean, you don't want to have too large of a board, excuse me, but you have more to govern, right? Like in venture, you're just shooting for the moon and you're going for it, and you're risking it all every day. You're risking it all to go for the moon. But when you're in private equity, it's not so much as forging a new path. It's more on identifying the already existing path that you need to get on, and making sure that you're doing the blocking and tackling and following the right formulas in order to get to where you need to be. And so it's more of not so much forging, but checking. and making sure that you're setting up the right KPIs, the right goals, and making sure that you're following every step of the way, as opposed to having to recreate that path that you would see in venture. So those are probably the two biggest differences that I would see between the two, board role positions. But they are similar in some ways, but different.
Cool. Well, you're running a search fund there as well. And, what can you tell us about, how they work and, the history of returns? I hear they're good. And what guidance do you offer, aspiring searchers?
Thanks, Hall. So with a search funds, I mean, to get to the heart of it, it's an LBO, merger and acquisition model for companies that are struggling with succession, where you have somebody that's in their 60s and 70s and they don't have anybody to pick up the business. And so what we do is, like traditional private equity, you lead with the fund. A fund finds a company, and then you plug in your management team after the fact. You buy, one fund buys the majority of the company, and then you plug in your management team and you manage the investment from there. And the seller doesn't have much influence. With a search fund acquisition, it's the other way around. You lead with the entrepreneur, you lead with the executive, and the seller gets to pick who their successor is. And so they have more influence on the future of the company post acquisition. And it's more of a collaborative path forward in that regard. And so there's $10 trillion worth of these companies in the United States alone that are struggling with succession. And over the last 40 years, search fund acquisitions have been the top performing equity asset class, which is double that of traditional private equity and traditional venture capital. So you're getting double the returns in half the time with half the volatility over the last 40 years. And so many people don't know about search funds, but it's becoming more and more known because the problem is becoming that much larger, and more entrepreneurs are finding out about this as a real career path. And we're at the tip of the iceberg of a multi-billion dollar opportunity that's going to keep us busy for a couple of generations and being able to serve these companies and to have a model that has been so proven, like the search fund model. And we're honored to be able to apply that model and scale it to not only companies in the US, but to other countries around the world.
So great. Well, let's talk about the impact of geography on search funds, and how do you guys approach the local ecosystems that you're in, and how does that change the perspective?
Yeah, no, you're exactly right. I mean, what we're doing is we focus on the entrepreneur to help us navigate those markets. So whenever we vet like over 4,000 entrepreneurs a year for acceptance into our program, and about 1% make it through. And we're very careful on making sure that we have, a good diverse group of entrepreneurs that are coming in with different industries, different ideas, different geographies, right? You can't have like 10 people in France with an aerospace acquisition, like Airbus, right, for an acquisition strategy. And so we want to make sure that we have, unbelievable entrepreneurs, but also entrepreneurs that are coming from different industries, from different backgrounds, so that we have a diversified set of investment opportunities. And so we really lean on those entrepreneurs to navigate those markets within their geographies. Maybe there's a language barrier, being in Europe, maybe not so much in the United States, but to empower them, to give them, the advice and the capital, like what we're providing, to help them navigate those markets. And that's really where our group really shines, is because we're able to provide those resources directly to the entrepreneur to help them navigate those key markets. And it helps us scale because we're able to share those resources among multiple entrepreneurs. And so that's what allows us to get into these different markets and navigate them.
Well, that's great. Well, in the last minutes that we have here today, what else should we cover that we haven't?
I just wanted to underline, how large of an opportunity this is. $10 trillion opportunity in the US alone. And it's a proven model for 40 years, the search fund model. It works. And average returns have been in the mid 30% IRR, which is double that of private equity and venture. And it's a fantastic opportunity to help sellers, right? That you don't want their companies having to shut their doors and all the employees lose their jobs and customers lose their suppliers and things of that nature. But to be able to serve these companies, serve the entrepreneurs, and generate compelling returns is why I'm in it. My grandfather had a company that he lost due to succession. He was a mechanic, and I wanted to grow up and be like my pap. And this allows me to do that. And that's why I chose the path that I did, so that I can serve more entrepreneurs. And so getting the word out and educating people on search, on its history, and also our history and what we've been able to do with our fund and with our program, is to be that premier partner for search fund acquisitions now and into the decades ahead.
Well, that's great. Well, how best for the listeners get back in touch with you?
No, I really appreciate that. I mean, they can send me an email, or my first initial and then Ondechek at shvllc.com. And they can also just shoot me a call. You shoot me a call on my cell phone, 504-452-2352, and talk about search, talk about helping these companies and changing the world here.
That's great. We'll put your contact details in the show notes. I want to thank you for joining us today. I hope to have you back for a follow-up soon.
Thank you, Hall. It's always a pleasure.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.